Well, hello everybody and happy Monday. It's the start of a brand new week and wherever you're joining us, thank you so much for tuning in. I hope that you're doing well. As a quick reminder, we do film, we do go live here on Facebook, LinkedIn, Twitter, YouTube, as well as Twitch. So thank you so much for tuning in. Let's start off with a market update. I know that's what you want to hear anyway. This is the big news. So what is happening with the financial markets? You've probably been paying attention to some of the news from this weekend as well as today. This morning I actually spoke with Mike Meeback on Fox Business, again, answering some of your most pressing financial questions. But all eyes are really on the stock market. As you probably remember, last couple of weeks, it's been definitely a roller coaster run. We had days where the market dropped by more than 1,000 points, closing down 800 points, and it's just been up and down. One day tech is like the place you shouldn't be. Another day like today, tech is where you should be, right? So the Dow closed up 380 points. The NASDAQ joined up 203 points. We're seeing big numbers, big performance out of names such as Apple. Tesla also did very well. NVIDIA, which is buying ARM, is also doing very, very well. We're seeing also a lot of movement, continuously see a lot of movement in healthcare and biotech as we're looking for more indications on which vaccine will prove to be successful as we go through the pandemic here across the world. So thank you so much for Brian Schumann. I see you joining us. I think many of us, you joining me from different parts of the world. Feel free to jump in comments. Tell me where you're joining me from. I would love to see you here and of course give you a quick shout out as much as I can. But let's talk about the financial markets. Now the big news, and I know many of you have reached out, including my clients, of what do I do? Is the market currently overheated? Is the stock market so hot right now that I should be looking to get more defensive? Now, if you're an investor in your 401k, you're an IRA, maybe your other private investments, I'm sure you're wondering the same thing. You've probably been watching CNBC and all the other financial channels trying to get an indication of when it would be time to start to pull back. Now, you certainly saw some of that pullback just a week ago, and that probably made you a little concerned, a little nervous, wondering whether or not you should start to pull back, whether or not you should sell, maybe take some profit, even what you should do. In fact, today we had several big financial analysts come out and say just that it might be time to really take a step back, really become more defensive. But on the flip side, you have also some stock market experts saying we've got room to go, that there's still going to be some more upside. So what do you do? What do you do? I'm going to tell you what you do, okay? Because how do you invest in a stock market like this? Now, obviously, when there's pullback, you might say, okay, well, I haven't been investing. Maybe I should start investing a little bit. And how do you do that? If you are in a situation where you look like, or you feel like you need to invest more because maybe you're looking at your retirement, you're like, based on everything I've read, I'm not even close to what I need to have saved for retirement today. So I feel like I need to make up some time. Maybe you're looking at your child's college savings plan and you're like, oh, I know I shoulda, woulda, coulda, but again, I didn't save that much for college, or maybe I didn't save anything. In fact, there was a recent study that showed that most parents haven't even started saving even $1 for their child's college education. So it could be a number of things. And you're also looking and thinking like, well, I don't want to miss out, but I haven't been doing what I needed to do. So if you're still bringing in income, then you might want to take a look at when there's dips and there's pullbacks in the financial market to be able to add to some of your long-term goals. But what's the best way to do that? You might say, Winnie, does that mean I should just go buy some stocks? Should I go buy some bonds? Should I invest in CDs? What do I need to do? And I'm going to say typically, if you're a first-time investor, or maybe you're not a first-time investor, but you just feel like you need to make up some time, you might say, well, should I put it in a CD? Because CD is really safe, right? A certificate deposit, FDIC insured, usually offered through your bank. When it's that secure, we also know interest rates are really low right now, almost at 0% level. So if you're buying a CD, you're locking up your money for that security, but locking it for what rate? And right now, for many of you, a CD rate is so low that you're almost better off just holding it and looking for other opportunities long term. Now, the second thing I would think about is if you have debt on your hands, let's say credit card debt, student loan debt, even a car loan or whatnot, that may be a good place to start to put some of the monies that you have. And the reason that is because if you if you get rid of some of that debt, you're no longer paying a large amount of interest on that debt, which is definitely a positive in your overall financial picture. For you, that's an immediate win. So definitely get your debt paid off before you decide to invest. But let's say all that's done, right? You have no debt, car is paid off, and you're ready to really get serious about investing for your future. What next? What do you do next? Well, this is what I would suggest you do. Now, certainly, it is sexy to go out there and pick a couple of individual stocks and say, I really love this, this, and this. I'm going to buy that. But that usually works better when you have a larger portfolio. Generally speaking, we like to buy individual stocks and securities when a client reaches six figures, 100,000 or more, because at that point you can buy different stocks and build a still diversified portfolio. And that's just a starting point. We'd actually like to see that number to be bigger. However, if you feel like, well, I don't know, I know you've been saying about building out a portfolio of mutual funds and whatnot, but just I feel like that doesn't do it all for me. And I can understand that, because some of you want to be like, you want to feel like you're really in control. You're in the driver's seat and you're like, you can swivel towards tech, or you can swivel towards biotech, or maybe you can pull back into fixed income and bonds, and you want to be a little bit more strategic. Well, one way that you can do that is you can simply purchase mutual funds or exchange traded funds, which are ETFs, in the disciplines or areas that you are most interested in acquiring more. So you're sort of like strategic in that you're really focused on what you're excited about, but then you still are sort of protected in being more diversified than having one particular holding, right? So you could buy, for example, let's say you say, I feel very confident that there's going to be a vaccine. It's going to help a lot of people. And I feel good about some of the news that's coming out about cancer medication and research and whatnot. So I want to invest in healthcare, right? But I don't know all the ins and outs of which companies are doing what drugs, which research and whatnot, which is really hard to unless you strictly focus on research in the healthcare or biotech space. Well, one way you can do this is invest in a ETF, which stands for exchange traded funds, which is an index fund of different types of biotech or healthcare in one. So you're buying a bit of each, and with a smaller investment amount. So you're risking less of your portfolio by getting sort of like a toe dip in that industry, if you will. So that would be a great strategy to take. Now, one other thing that people will ask me all the time is, well, what if like I didn't have that much? Should I just buy one mutual fund that has a little bit of everything? And actually, that's actually a good point. So if you're just starting off and you don't have a lot, you can certainly invest in a diversified mutual fund, and you can also invest in one of these robo investments too. So for example, you've heard me talk about savingpi.com. SavingPi allows you to do that. So with a $5,000 minimum investment, you get a fully diversified mutual fund allocation that's customized just to you, your risk tolerance, and your savings goals. So it's really quite personalized for your profile. So that's a good way to go too if you're not sure. All right. So next thing we do, I know Brian Schumann is hashtagging toe dip. Yes. I will say that wasn't a completely brand new idea from me. I will give credit to Jim Cramer of CNBC. I read CNBC constantly, and that was actually one of the terms that he used just recently when the market was pulling back, and he was saying that you could, at that point, if you have investing a portion during that time. He called it a toe dip. So that's where that's from. All right. Next question. This is a big one that's actually trending on a lot of the financial news today. And I really want you to be paying attention to this, as this is a topic of the payroll tax. I'm actually surprised that this continues to be in the news. And not only that it's trending. Maybe I shouldn't be surprised, because tomorrow is when third quarter taxes are due for those who are self-employed. So whenever taxes, I think, are coming due, people are more apt to sort of do research on taxes. So this payroll tax thing is in my mind, a complete mess and kind of ridiculous in any ways. So the government or the president has initiated a payroll tax holiday. That means between September 1st and the end of the year, your employer, so it could be myself or my team, 6.2% of your paycheck is withheld for payroll taxes each pay period. Okay, 6.2%. And half of that is made up of your portion, and the other half is made up of the employer portion. But your whole portion is at 6.2%. So the president says between now and December 31st, you can have a holiday on your payroll tax, which means you don't actually have to pay into your payroll tax right now. Instead, you can just get that extra 6.2% if your biweekly income is less than $4,000, which for most Americans is the majority. Now, that sounds great and all, except that they don't get rid of your payroll tax at all. You're just put on a holiday so that come January through April of 2021, which is not that far away, you will have to pay all of your payroll tax that you had the holiday on back between January and April 31st. And you're wondering, right? You also have to pay the payroll tax on your paycheck between January and April 30th. So if you're like most people, that's almost double your payroll tax between January and April. Yes, that's right. Does it make sense? Anybody think that makes sense? Because I'm in my mind, I'm hearing crickets and bats and all sorts of Halloween things, because to me, it absolutely doesn't make sense. And it's not just me. Let's talk about who else doesn't make sense. All right, these are the companies that are not taking the payroll tax holiday for their employees. All right, let's list them. Costco, UPS, FedEx, Home Depot, CVS. And you might be thinking, well, okay, that's good. Maybe they're just like really, employee. They really want to just, they don't want to mess with it because they're so big and so busy. They don't want to have a payroll tax holiday for their employees. But get this, 2 banks as well. JP Morgan Chase and Wells Fargo. Yes, both financial firms deciding not to take a payroll tax holiday. All right, so you might say, okay, well, that's good and all, but who else, right? Maybe other people, maybe government agencies. Okay, well, what about the U.S. House of Representatives also deciding not to take a payroll tax for their employees? Interesting. So the government decides that this is not a good idea as well. Yeah, but the president thinks it's a good idea. But so we at my company are not taking this payroll tax holiday as well, because I talked to my team in detail on how it works, and I also sent them articles, and I also offer them, to take their time to do research, and nobody elected to take the payroll tax holiday. So that, in a nutshell, is the payroll tax holiday. I just want to make sure you are paying attention and following that, because that's news that continues to trend financial news. I don't even know why, but you got to know why, and that's the gist of it. Now, the U.S. Treasury Secretary also said today, or recently, that we in the United States should not be worried about the U.S. rising deficit. Okay. So we should be worrying about the U.S. deficit. So, not sure what that means, but the last time I checked, the government still hasn't come out with a stimulus package or another stimulus check. So they don't want us to worry about the rising deficit. So are they worried about the rising deficit? I'm hoping somebody's worried about the rising deficit, because if they're not, then, Brian Schumann, your children and my children, guess what? Are going to really be worried about the U.S. deficit, because they were going to be so underwater in debt and having to pay so much in taxes that, forget about Social Security at that point, because it's only going to get more dire. So I don't know. I just think that you and I, we need to have these rational discussions and think through what exactly the government has in mind for us financially, because at some point, the buck stops somewhere, and we have to worry about our retirement, and we have to worry about putting our kids through school and all these other things to keep our lives sustainable and keeping our loved ones fed and safely secure with shelter and everything else. But those are the things that are happening. And in fact, the World Health Organization actually announced that on Sunday, there was a record label. Well, I can't even speak today. I don't know what's happening. So on Sunday, the World Health Organization announced that there was a new world record of COVID-19 cases on a global scale. The highest it's ever been was this Sunday. In fact, the 3 major contributors to that number were Brazil, India, and get this, the United States. So probably no surprise there, but these three countries made up the majority of the cases of coronavirus. And we continue to see, in fact, on Sunday, the highest level of deaths as well. So things are definitely don't seem like they're getting that much better anytime soon. So from a financial standpoint, you want to really pay attention to this. Make sure during this time to continue to fund your emergency fund just in case, right? And continue to keep your expenses low. We actually saw a little pop in the retail numbers, financial retail numbers recently, and that concerns me. I think we need to continue to find other ways to save our money, store our money, bring in additional streams of income. Don't get too picky right now. If you have work, and maybe it's not the most thrilling and most the most exciting thing of your life right now, but if you've got a paycheck right now, I think for many of us, we got to embrace that and just be happy with that. And in time, when things get a little bit better, we'll definitely have more area for choice. But right now, focus on that. Focus on your well-being. And most importantly, focus on the things that you can do. So one tip that I shared on Fox Business earlier today that I would love to share with you is this is my tip for the week. Okay. Super easy, super doable. And let me just tell you, I can figure it out so you can figure it out. And that is grocery shopping. I want you to stop going to supermarkets. All right. This sounds crazy, I know, because we need groceries. I'm not saying not to get your groceries. I'm saying stop going into supermarkets. The reason it is I would encourage you to look at your local supermarket. Like we have it here. We have Albertsons and we have Amazon Prime, we have Whole Foods. We have a lot of these supermarkets right now offer curbside pickup, which I highly recommend. Because number one, allows you to do your shopping in the comfort of your own home. You can look at the app, take a look at what prices are, what things are on sale, what things are in inventory, what things are out of stock, and then put together your shopping list. And what I like to do is once I'm done with my shopping list, I literally walk to my refrigerator and take a look and then cross-reference to see if I'm missing something or I forgot something or needed to add extra something. And then I do the same thing with my freezer. And the nice thing about that is then you are spending while you're shopping, I should say, when you're very relaxed, you're not over shopping, you're buying just what you need. And exactly, there's no surprise because it's adding it up as you're adding things to your shopping list. And then once you're done, you can hit send, pick a time for pickup. Most supermarkets now even have areas, parking spots reserved for you that say curbside pickup. You go in there, you make a phone call or you check on your app and they know that you're there and they bring the groceries to your vehicle already packed and ready to go. Super time saver, but also some of you are saying, well, Winnie, can I just order from Instacart or some delivery service? And I would say no, because most services like Instacart and whatnot, they actually sell your groceries at a higher price. And number two, the delivery usually has a cost. And third, you usually also want to tip your driver. So if you are looking at ways to reduce your spending and really maximize your savings, maybe, adding to your emergency fund, you actually want to stay away from the supermarket. Definitely do curbside pickup. Be really, really pragmatic about this. And I'll tell you, even at my home, this is exactly what we do. We look for things, we buy things, we talk with the family, figure out what they want to eat for the week. Super simple. Pull up the car, you're in, you're out, and you can get back with your business and get back to focusing on bringing in income. And it really helps a lot because most people, when they go to a supermarket or they go to the mall, like I used to love outlet shopping, so much of your budget can be changed by impulse shopping. And I don't want you to, even a 10% or 20% change in what you would spend by impulse shopping can really add up long term. So I just want you to think about that. And thank you so much, Brian Schumann, for helping share those thoughts too. Really important. I just want you to continue to hone on the little things because it's not always about the big things, about the stock market and what's happening with Elon Musk and what's happening with who and ha. It's also down to your most basic spend and save. And so what we're looking for is just simple, easy ways that we can save money and really get the things that our families need without putting ourselves in financial, financial, what should we call this? Financial trouble, financial trouble for sure. So thank you all so much for tuning in. A huge thank you to all of you who have tuned in here. I know there's a question. I got a question today actually. It says, what stock will get me a millionaire? Interesting question. I think it's pretty easy to say. If you want to invest, you got to start with doing some research, and highly recommend check out my friends at CNBC, at Yahoo Finance, at Cheddar, Wall Street Journal, Barron's, Kiplinger. There's so many great financial sites I would recommend that you start. Great information. But most importantly, for those of you who are self-employed, don't forget tomorrow, September 15th, which unfortunately means another time that you have to pay your quarterly taxes. So tomorrow, a lot of people are going to feel a little poor. Last tip for you: if you have the money to pay your taxes in your account and you're going to be paying it tomorrow, and you also love to travel like I do, maybe look at putting the IRS payment on a travel credit card. But as long as you can pay it off in full, that might actually make a lot of sense. Thank you so much, my friends, for tuning in, and I hope that you have a great week. I will be joining you again tomorrow. Tomorrow we have a lot of fun. Tomorrow we have an interview, another very important business powerhouse that you'll want to meet and learn from. So I look forward to joining you again tomorrow, 1:30 Pacific, 4:30 Eastern. And don't forget, if you could do me a favor, subscribe to our YouTube channel, Winnie Sun TV. And if anything that we shared today was helpful, please share this information with a friend or a loved one, because you just don't know if you might help them with something that's really important in their lives.